Welcome to the deep dive. We're here to help cut through all that noise.
Yeah.
A world just flooded with information, trying to figure out what really matters and how it all connects. Well, it can feel pretty overwhelming. We're all just trying to make sense of it, aren't we?
Absolutely.
So today, we're taking a journey, a deep dive to some really dynamic, interconnected forces shaping things right now. We're looking at the global economy, the digital finance world, which is changing so fast, and also the critical state of public health.
Exactly. And we've gone through this stack of sources. You've gathered everything from World Bank reports, Federal Reserve statements, policy analyses from places like Brookings and the Council on Foreign Relations.
Right.
Plus, cutting-edge crypto market intelligence, environmental insights, the works. Our mission really is to pull out the most important nuggets, connect those dots that might not seem obviously linked, and basically give you a shortcut to being well-informed.
And hopefully with some surprising facts along the way.
Hopefully, yes, and some perhaps non-obvious implications.
Because it's not just about the headlines, is it? It's about getting the why and the how behind these huge global shifts and ultimately how they touch your world. Okay, so let's start unpacking this. How do these big global bodies even begin to measure something as huge and, well, complicated as the world economy and people's well-being?
It sounds like a massive undertaking, and it is.
Right.
But the World Bank, through its International Comparison Program, the ICP, they've actually been doing this for, believe it or not, 50 years now.
50 years.
Wow. And this program is, well, it's fundamental for understanding global poverty. You see it in reports like an adjustment to global poverty lines.
And the numbers are pretty sobering, I have to say. I read that half the world's poor live in just 5 countries.
That's right. It's incredibly concentrated.
And almost 1 in 2 people globally lives on less than $5.50 a day. That's according to the latest updates.
Yes, using the 2017 figures. And beyond poverty, the ICP data is vital for tracking progress on the UN's Sustainable Development Goals. But it also picks up other critical trends, like the fact that non-communicable diseases, things like heart disease, cancer, now cause 70% of all deaths globally.
70%? That's huge.
It is. And what's really fascinating here is how these measurements work, especially using something called purchasing power parities, or PPPs.
Okay, PPPs, I've heard the term.
Right. So sources like the World Bank's Visual Guide explain it well. PPTs give a much more accurate picture than just looking at currency exchange rates.
How so?
Because they account for what money actually buys in different places. I mean, a dollar in New York doesn't buy the same as a dollar in, say, New Delhi.
Of course. Makes sense.
So PPPs adjust for that price difference, giving us a truer comparison of living standards and economic output. It's essential for goals related to social inclusion, for example. And when you use PPPs to track national economies over time, well, that's when you really see the rapid rise of places like China and India. Big shifts in global economic weight.
And these economic shifts, they don't happen in a vacuum, right? They're tied into trade policy.
Absolutely. Trade policy plays a huge role. Think about the impact of the Trump administration's tariffs, the Section 232 tariffs on steel and aluminum, for instance.
Right, I remember those. But then I saw something, I think it was CNBC, reporting a federal court ruled a lot of those tariffs were actually illegal.
Yes, that's correct. There was a significant court ruling.
So what's the fallout from that? Does it just mean the tariffs go away?
Well, it's not quite that simple. The key insight really is that these kinds of rulings, even if they seem like a win for free trade, can paradoxically increase uncertainty for businesses.
Increase uncertainty.
Think about it. Companies might have already spent years adjusting their supply chains, their investments, based on those tariffs being in place.
Okay.
Then suddenly there's a legal challenge, maybe an appeal, maybe they get overturned eventually, maybe not. That limbo, that unpredictability, makes long-term planning incredibly difficult. It can destabilize things more than the tariff itself sometimes.
I see. So that kind of volatility ripples outwards.
Exactly. It affects market confidence, investment, maybe even national budgets. And that kind of economic stability concern brings us right to the doorstep of the Federal Reserve.
The Fed. Always trying to steer the ship.
Oh, yeah.
So how are they factoring in all these global pressures alongside domestic ones?
Well, they're constantly monitoring, as they say, risks to the financial system to try and maintain a healthy economy. Their main policy group, the FOMC, makes the big calls on interest rates.
And they recently kept rates steady, right?
Yes. In their July 2025 statement, they maintained the target range for the federal funds rate at 4.14 to 4.12%. Held steady. But what's really revealing sometimes isn't just the decision, but the discussion around it.
What do you mean?
In that same meeting, there were dissenting votes. Two members actually wanted to cut rates by 0.25%.
Oh, interesting. So disagreement at the top.
Exactly. And that dissent isn't just, a footnote. It highlights the really difficult balancing act they face, juggling worries about inflation versus concerns about slowing down the economy too much. It shows the genuine tension and different viewpoints involved in managing something so critical.
That's a great insight into the traditional economic levers. But let's pivot now. Let's zoom into that other current. The digital economy, specifically crypto. This space feels like it's moving at light speed.
It really does.
We were seeing Bitcoin trading well above $110,000, Ethereum over $4,000. These aren't small numbers. It feels like wider acceptance is growing.
Oh, absolutely. The institutional embrace is undeniable now. It's not a fringe thing anymore. You have firms like MicroStrategy just consistently adding to their Bitcoin stack. They added another 4,400 coins recently for $450 million.
Wow. How much do they hold now?
Their total holdings are something like 636,000 Bitcoin, worth around $70 billion. It's a massive long-term bet.
70 billion.
And it's not just them. You see Bitmine Immersion boosting its Ether holdings significantly, aiming for like 5% of the total supply. Even CleanCore setting up a Dogecoin treasury. It signals market maturation, serious capital flowing in.
And it's also moving beyond just holding the currencies themselves, isn't it? This idea of tokenized assets.
Yes, that's a huge trend.
Could you break that down quickly? What does that actually involve?
Sure. Essentially, tokenization means creating a digital representation, a token of a traditional asset on a blockchain. That asset could be a company stock, a bond, real estate, even gold.
Okay, so like a digital deed or share certificate.
Sort of, but programmable and easily transferable on the blockchain. So we're seeing platforms like Xstocks launching with tokenized stocks on Ethereum. RAK properties in the UAE accepting Bitcoin for real estate deals, even tokenized gold making its way into U.S. retirement accounts, IRAs.
So it opens up new ways to own and trade things.
Exactly. Potentially increases liquidity, makes fractional ownership easier, simplifies cross-border transactions. It's a really interesting development.
So if we connect this digital frontier back to the bigger picture, it's expanding incredibly fast, which must mean both huge opportunities and, well, new kinds of risks and complexities.
Precisely. On the opportunity side, one powerful tool emerging is on-chain analytics or behavioral analytics.
What's that?
Think of it like having X-ray vision into the blockchain. These tools let analysts track every transaction, see how large holders the whales are moving their assets, whether they're accumulating or selling.
So you can see market sentiment in real time.
You can get a much clearer picture of aggregate investor behavior, yeah. It offers a level of transparency we just don't have in traditional markets. But, as you said, there are challenges. Regulation is a big one.
Right. How are regulators keeping up?
It varies. The EU's market watchdog, ESMA, has raised concerns about tokenized stocks, worrying that investors might not fully understand what they're buying. There's a need for clear rules.
This is some caution there.
Oh.
Are others moving faster?
Definitely. You look at Singapore, for example. Cointelegraph notes they're actively trying to innovate in both crypto and AI, perhaps taking a more proactive approach while the West is still, figuring out the regulatory framework.
Interesting contrast.
Even the U.S. government is dipping its toes in. CoinDesk reported that some agencies are starting to put economic data onto blockchains just as a proof of concept for now exploring potential benefits like data integrity.
But alongside all this innovation, security must be a massive headache.
Oh, it's critical. And the attackers are getting sophisticated. We saw hackers recently using a known smart contract vulnerability, the classic ENT 77702 exploit, apparently, to steal specific tokens. We've seen Discord scams netting $170,000. Phishing attacks hitting platforms like Venus Protocol for millions, $13.5 million in that case.
13 million?
Wow. It's a stark reminder of those red flags of fraud that investor.gov warns about, promises of guaranteed high returns, the pressure to act immediately. Those are still very real risks in this space.
Those security risks really underscore the need for trust and solid infrastructure. Which brings us actually to another critical infrastructure, one that's maybe less visible day to day, but just as vital: public health and the data that supports it.
A very important shift in focus.
Yeah, and some of the things we're hearing lately are quite concerning. I was looking at notes from a Council on Foreign Relations webinar from earlier this year about public health policy. They talked about the unfortunate consequence of actions that have undermined vaccine confidence.
That's a major issue.
It's easy to forget. But measles was declared re-eliminated, actually in the U.S. back in 2000. A huge public health success story.
Absolutely. Decades of work went into that.
Yet today, the data shows 31 states are now below that 93% coverage threshold for the MMR vaccine, the level generally needed for community protection.
And this isn't just an abstract number, sadly. It has devastating real-world impacts.
Like the recent news out of Texas.
Exactly. The tragic death of a child from measles in West Texas, the first measles death there in 10 years. Texas has seen, what, over 120 cases recently? And there are outbreaks popping up in lots of other states, too. Alaska, California, Georgia, New Jersey, New York, Rhode Island, New Mexico. It's a deeply worrying resurgence.
And it seems like the systems meant to handle this are also under strain.
That's another layer of concern. Key federal vaccine advisory committees, important bodies like the National Vaccine Advisory Committee, the ACIP, they face postponements. Questions have been raised about the credibility of some advisory processes. And then there was that executive order restricting federal funds for states or schools requiring COVID-19 vaccination. It all adds up.
So it really begs the question, what happens when that fundamental public health infrastructure starts to weaken? The sources seem to point towards a kind of quiet erosion.
It's a serious risk. The data points to a significant reduction of government workers in key agencies, estimated 1,200 dismissals at NIH, maybe 1,100 at CDC, including many fired.
And these aren't just numbers on a spreadsheet.
No, these are often people with highly specialized knowledge, crucial links between federal agencies and state or local health departments. That expertise isn't easily replaced overnight. At the same time, you see an unraveling, as one source put it, of the international health network.
Like the U.S. withdrawal from the WHO.
That, and also massive cuts at USAID are terminating thousands of contracts, projecting a huge workforce reduction. The real danger here is that we create blind spots.
Blind spots.
Yeah. Areas where new health threats, new viruses perhaps, can emerge and spread without us even knowing about them. It gives this false sense of security because we're not seeing the threat until it's potentially too late.
And it pushes more burden onto local levels.
Absolutely. You see examples like Connecticut dealing with uncertainty around federal grants. It highlights how much we rely on state and local health departments for the basics. Good old-fashioned public health, like ensuring safe drinking water, food safety inspections, things we take for granted.
And the impact on future preparedness.
That's the other long-term worry. Declining research funding directly hits the pipeline for the next generation of public health experts and scientists. It weakens our ability to respond to whatever the next crisis might be.
And underlying all of this, whether it's economics, crypto, or health, is the absolute need for reliable data. I saw Brookings has been doing work on data integrity, raising flags about the cost of compromising federal data, and even instances of a U.S. government data purge.
Yes, that data integrity piece is critical. Without trustworthy data, effective policy becomes almost impossible in any of these fields.
So we've covered a lot of ground here, from global economics to crypto to public health. When you pull back, what's a big takeaway? How does it all connect?
I think the main takeaway is just how interconnected everything truly is, often in ways that aren't immediately obvious.
Right.
Think about it. An economic policy decision, like a tariff or an interest rate hike, that can directly affect a nation's budget, right?
Sure.
And that budget decision might then lead to cuts in public health funding or less money for research into infectious diseases. It's a chain reaction.
Okay, I see that link.
Or consider digital finance. That rapid innovation creates new economic pathways, fantastic. But it also demands strong regulations and, crucially, reliable data infrastructure to prevent fraud and ensure stability. Those are the same kinds of data integrity issues that plague public health when reporting is compromised.
So the underlying needs are similar.
Very similar. And fundamentally, these big challenges, pandemics, economic downturns, climate change, they don't respect borders. They demand international cooperation. Yet, as we've touched on, that very cooperation seems to be under strain right now.
And data is the thread running through it all.
Absolutely. From the World Bank's poverty data using ICP, to the on-chain analytics in crypto trying to gauge market moves, to the vital public health statistics guiding disease prevention, reliable, accessible, uncompromised information is the bedrock.
And this theme of interconnectedness and rapid change, it's not just limited to these areas, is it? We see similar dynamics elsewhere.
Definitely. Think about the energy transition. Bloomberg NEF tracks this closely with their outlooks on electric vehicles and new energy. Huge economic, technological, and policy shifts happening there.
Or artificial intelligence.
Exactly. Brookings is doing important work on AI safety governance, trying to grapple with the ethics and control of these powerful new tools. Same pattern. Rapid innovation, huge potential, significant risks, and deep interconnections with society and the economy.
It's a lot to track.
It is. But it's not all challenge. It's worth noting efforts like the Global Impact Investing Network, the GIN, they're tracking over, I think, $1.5 trillion globally in impact investments.
So that's capital specifically aimed at positive outcomes.
Yes, money intentionally directed towards addressing social and environmental challenges alongside financial returns. It shows there are ways to consciously try and steer capital towards building resilience and tackling some of these complex global issues we've been discussing.
So we've taken quite the deep dive today. We've looked at global economic gears, the wild ride of crypto, the critical state of public health, and that foundational need for data we can trust. The takeaway for me seems crystal clear. None of these things exist in isolation.
Not at all. They're deeply tangled together. The information we trust, the policies governments choose, the technologies we develop, they all interact, constantly shaping each other, creating this complex mix of incredible opportunities and, frankly, significant vulnerabilities.
Understanding those connections feels more important than ever.
It's absolutely crucial, I think, for anyone trying to navigate the world today, trying to make informed choices, whether that's personal decisions or thinking about collective action.
So here's a thought to leave you with. As information keeps splintering and these global systems keep shifting, how do you, in your own communities, in your own conversations, help build that trust and understanding? How do you help bridge those gaps between policy, technology, and just basic human well-being?